very good evening to all our mentorship traders. Friday evening session. We are on the 21st of August 2020, Friday evening, 9 p.m. Indian Standard Time. As always, we're going to talk about the index from a weekly perspective. What can we expect the coming week? And also we'll take a look at few sectors. I welcome all our new community members. Well, we have the Nifty future weekly chart in front of us, and we've got a 1.7% movement from the index this week. The index is showing enormous resilience and strength to push itself further up towards that 11,500 mark. 11,466 being this week's high. On a week-on-week basis, we have 3 weeks now where we have a higher high and a higher low. Of course, with this kind of move, momentum indicators will be overbought, will be stretched, and they continue to stay so. Well, we had some hook setups on the weekly. We've been talking about that for the last 4 weeks now. But that possibility has kind of eroded with this week's move. Yes, from an intermediate perspective, since the highs of week ended 24th July, till now, the index have rallied up. And throughout this, the momentum had kind of plateaued out, which is clear because erstwhile, if you see this move, and if you allow me to mark it, what I'm trying to explain is if you see movement from this bar all the way up till this bar, which was 24th of July, this was continuous rally from the index. Over the last 4 weeks, yes, the index has gone up, but amidst that, we have some volatility. Amidst that, we have some amount of profit taking, some brave shots coming into the system, and a little bit of volatility too. So that is primarily because of the fact that the momentums are deeply overbought. That's the case. But the index seems to be still well poised. It seems like it's in no mood to give away its gains. Going back to the daily chart now. Remember this rising red channel that we had drawn, and how beautifully the index as of now is respecting this as a source of resistance. So be it. It is working out well for the index on the upside, and if it continues to extend itself further up, we're looking at close to that 11,600 mark. We have something called a tri-star, kind of a tri-star. Generally, the middle one should be on the top. That's not the case. But we have kind of, I would say, 3 small candles, 3 spinning tops, where a lot of price action is happening based on the gap down or successive gap up. You see, on Thursday, there was a gap down, and then the index did not go down further. That is no sign of follow-through selling. And today, there was a kind of a small gap up, but the index couldn't follow through further on the upside. So it's a very strong tug of war that's happening at the current price. In such kind of a situation, my past experience has always suggested me, rather than having a contrarian view, the index will find it very easier to follow the underlying trend, if there is any underlying trend. Of course, in this case, we have an underlying trend. It's up and it's resilient. So one should not be, let's say, brave enough right now to call that this is the top. It will be too early or too, let's say, amateurish also. Looking at the indicators that we have in our hands, especially the momentum indicators, we are looking at some degree of divergences for sure between price and relative strength index. We've been looking at these kind of divergences for quite some time, but the index is in no mood to come down. One cause of concern for me is the price movement since 5th of July, because the index essentially has not done much in terms of direction, but it's the momentum which has come off significantly, or I would say has definitely come down, if not significantly. So these are very early signs of topping out, or I would say these are very early signs of the market slowing down. It suggests that the markets are getting tired. That does not necessarily mean it will come down. Looking at the trend and the underlying momentum, we should continue to be cautiously bullish in the market. I will continue to be cautious. I will continue using the word careful because it's the occasional gap downs and the nasty opening which actually jars out the open long position. So please trade short term in nature, trade a little lesser quantity, because these are the kind of markets for a positional trader can be a little gyratory, can be a little more than usual volatile. One look at the sectoral performance. If you look here, I have got the 1 week rate of change performance from the sectors. And I would take a look at the end. We have pharmaceuticals, which have finally slowed down, with IT and FMCG. Now, pharma, FMCG, and IT have been the first movers since the 23rd of March kind of move. And they are in an extremely strong uptrend. Pharma, IT, and FMCG. All three are in a well-structured uptrend, and all three are in a state where one should look to buy on a dip. We have been discussing this over and over again in our weekly analysis, that on one side of the market, it's essentially the financial services and the banking. And on the other side, it is the cluster of FMCG, IT, and pharma. This kind of a relay that is happening between these two pockets. And in between, there is some exceptional moves that has come from sectors like metal and also auto. Now, metals and auto, especially metals, exceptional move, means this is an example. These are the kind of examples where you'll see indicators going overboard and how overboard they continue to stay irrespective of what the reading is. This index has definitely moved into a structured uptrend. This index also, Nifty Auto, has also moved into a structured uptrend, but it's Nifty Auto which is clearly showing very starting signs of divergences, and it has checked or tested the upper border of my rising channel. So I feel auto will slow down. Last time I said so, I was horribly wrong because the index decided to go up thanks to stocks like Maruti and M&M. Let's see what's in store this week. Small and mid cap continue to perform well. This week it was the small cap index which was up more than 5%. That okay, we've got enough large caps at the lower prices. Now let's shift our focus or take some extra risk. Market is now willing to take risk, and that's why the small and mid caps are doing so well. Going forward next week, I think IT would try and bounce back, especially my eyes will be in stocks like TCS. TCS has been coming down for quite some time. It's in a well-structured uptrend. It's going to find some, I hope that it's going to find some support within these 3 moving averages. It has managed to do so since mid-May. Every time it has come down to the averages, it has found support and it bounced back. And I think so will be the case now. The weekly charts are extremely strong. It has moved into a new life high. So within the IT, I'll be keeping a close watch on TCS for sure. FMCG, we've been talking about how the index should take out the 30,000 mark and should, consistently hold itself up, and it has managed to do that. FMCG is the next index which is heading towards the life high for sure. Buy on a dip has worked really well in this sector, and so be it now. Look at stocks like Hindustan Unilever, Dabur, ITC, Godrej Consumer, etc. I think they continue to be in that structure, and one should continue to keep their positive bias and look to buy on dips. Pharma, definitely stocks like Cipla, Dr. Reddy, they are consolidating, and they can also give us a move further ahead. but it's the weekly chart of the Nifty Pharma, which is like extremely stretched, I would say, which means that upsides can be capped. I need to learn from the chart of metals, but having said this, from a trading perspective, risk reward becomes a little difficult. So if next week, anytime I feel or the chart suggests that Nifty can slow down or come down by 100, 200 points, then I think FMCG, pharma and IT, especially those stocks which I mentioned, should be the ones that one should look into if you're going long. And it's the financial services and bank Nifty and the banking stocks which are yo-yoing on both the sides. Now, within the bank Nifty, there's a bit of tug of war between the private sector banks as well as the PSU banks. And when you talk about the PSU banks, it is State Bank of India, which gave a pretty good move recently. Today's move was also good, but then it kind of slipped from the day's high. It's struggling. If you look at the weekly chart, it goes up and it's actually facing quite a bit of resistance up here. But Bank Nifty is looking promising. Bank Nifty is at resistances of 22,440, let's say 22,450. And if the breakout comes, it has potential to take it towards 23,000. That will be a good move for the Bank Nifty, as well as it will give support to the Nifty, especially if you have auto and metals, if they slow down, if at all. Even if they don't come down, even if auto and metals slow down, which is very likely, I think the market will try and find some buying interest in Bank Nifty, banking stocks, SBI, ICICI Bank, Kotak Bank, likes, and of course, when the markets are a little soft, then FMCG, IT, and pharma. Within IT, I would stick my neck out and keep a very close watch on TCS for a prospective movement coming up next week. So to net it off, cautiously bullish continues the stance. Index is slowing down from it's very evident from the smaller spinning tops, one after the other shaping up on the daily chart. But the index has also proven itself that it has the potential to bounce back. It's not going to give up that easily. With that in mind, we'll see if the index manages to break above 11,450, 11,500 and 11,600 are the next levels on the upside. And on the downside, 11,250, these are all future market levels, will act as the immediate support. Well, that's it for the analysis pertaining to the index and few sectors. As always, we will discuss your trades and your questions.